think the world really changed in the post-financial crisis world because post-financial crisis world, central banks began to do very interesting tools, not just quantitative easing, but negative interest rates as well.
Right.
So if you look in Japan, they have negative interest rates. If you look at the Eurozone, they have negative interest rates as well. What that means is that if you're a pension fund or any kind of huge investor in Japan or Eurozone, your money is being set on fire. And so you look at us, you look at the US and be like, oh my gosh, they have positive interest rates. That's like a gift from heaven, right? I
Yeah.
got to invest in the US. And so you can have 10-year rates lower than, let's say what inflation would imply, because you have a lot of people abroad who have negative interest rates and want to buy that because it's so much better than what they can get at home.
Got it.
So it's very misleading to look at interest rates and just in a way of, let's say, growth and inflation, because we have a global economy, like you mentioned, and what other people do, specifically what other central banks do, have an impact on the demand for US treasuries as well.
Definitely. From a global perspective, does other country also buys US treasuries? For example, like China, is China a really big market to buy US treasuries?
So this is what happens. So let's say you buy something from China, like, okay, so dollars go to Chinese company.
Yeah.
What does the Chinese company do? Oh, it wants RMB, right? So it goes to its bank and it sells the dollars for RMB. And what does its bank do? Its bank then basically gives it to the PBOC. And so that's how they have this huge, I guess, dollar savings account, dollar rainy day fund. That's worth $3.5 trillion. It's not all in dollars, but the total value is about $3.5 trillion.
Wow. Yeah.
And so, when we do a lot of trade, like we have persistent trade deficits with China, right? That's a lot of dollars that flow into China. And then what do they do with their giant dollar piggy bank? They just buy safe assets like treasuries because it's a safe asset. They're not going to buy Apple stock or something. They need something that's not too volatile and has no credit risk. So it's really this idea that treasuries are a form of money. You can just think of it as just a whole bunch of cash.
Gotcha. That makes sense. Yeah. That's good to know. And then I think somewhere, is it true that post 2008, kind of like the Euro market or the global, the demand for buying treasury has declined in the global market because the confidence to the US economy has potentially lowered?
I don't know if people buy treasuries whether or not they have confidence in the U.S. economy. I mean, if the U.S. economy does well, your treasuries don't earn you more money, right? If it was about confidence in the economy, you think about buying stocks or something, right? Because maybe if the economy does well, your stocks could go higher. But if you buy treasuries, whether or not you get paid back has nothing to do with, the confidence in your economy. It has everything to do with the fact that the government can just print more money. So I think that is right, that foreigners, I think what the data is saying, that the foreigners don't really increase the amount of treasuries that they buy. But that could be for a whole lot of reasons, right? For example, global trade. Maybe the global trade with the US is not as big as it used to be or not growing.
Yeah.
That could be. And something else that is happening is that instead of buying treasuries, they buy agency MBS for a slightly more return. So some of the sovereign funds do this as well. So it's not clear to me that that's the case, because treasuries are low yielding. You can buy agency MBS, you can buy corporate debt and so forth.